folks, Dan Frio here, the mortgage update. Today is, actually it says it right here, I didn't even realize that, 3/9/2020, but I like looking at my watch. So, what happened today? Holy moly. Well, let's go through the timeline. This is probably the best way to do it, because the Dow Jones today got crushed, or all the stock market pieces got crushed. The bond market started out like unbelievable. I've never seen this big a move in my whole life. I got in this in 1988. So I'm 54 years old. This is what I've done my whole life. Let me go over, recap the day, and it was nuts. You could see here, when we started the day, the mortgage-backed securities were up. This shows down, but it was up 81. Look at these numbers, and this just kind of reflects a brief piece of this, but it missed the 81 hit. But right here, the market opened, the Dow was down 1,700, almost 1,800. Mortgage-backed securities right at the open were up 73. That's absurd. We went into beyond record territory, and then we just started locking in everybody. You see the rate lock alerts here. I'm going to show you what happened. We didn't have it at the beginning of the day, but about midday we started getting alerts to lock in. And when I saw this, I basically got prepped to start locking anyways. But then by the end of the day, I was done. I locked basically almost every client of mine in. I think we did lock everybody in. So let's get to it. The next briefing is, we got a briefing here, and then it came out, we got a quick little newsletter, and then at noon we got an alert saying lock, 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 lock. Why? Is because we went from a 72, 70, or 81 up to now 33 up. So we lost almost 50 points in this time frame. That's a huge move. And then as the day progressed, it even got worse. Now we're at 11. And again, remember, we started basically up 81. So that means we gave back 70 basis points in rate. I've never seen the market ever move 70 points in my life. So this today, basically, we had one big blip in the radar, and we caught it for all of our clients. Everybody other than if you applied late in the day. We got you. We got you covered. We even went back to a lot of clients that we had locked in about a week or two ago, and I'll be reaching out to all you guys tomorrow. And I was able to renegotiate a lot of interest rates for a lot of our clients. So if you're in our pipeline, you'll probably get an alert from me tomorrow. You get a phone call, an email, or a text from me with hopefully some great news for you. So that's that. So that was the progression of the day. The Dow got just absolutely hammered. All right. So what happened? Well, the Dow dropped, ended up down over 2,000 points. That's the one biggest day drop ever. Okay, so the good news about this is, well, those with money in the stock market, you're not too happy at this point, especially in the last month. And you're going to say, Dan, man, you were right when you kept saying pigs get fat, hogs get slaughtered. I kept telling people for months, pull money off the table, pull money off the table. Hopefully you listened. So if you didn't listen to me there, I hope you listen to me when it comes to mortgages. So hopefully I got you out of the stock market. You pulled some money aside and kept a little nest egg. Now let's start moving that money back into the market. That's my financial piece of the day. On the other side of the equation, that's making you money. Now this is a roundabout way of making you money. Let's get you a mortgage that saves you a bunch of money. It's either going to save you monthly. I had multiple clients today with rental properties and other kind of properties saying, you know what, and it was funny. I had one gentleman just say, take me out as long as I can go. That isn't a bad idea. Let me explain why. A lot of times you'll hear me say on here, well, you know what, let's refinance you, keep paying the same payment, but let's apply that, let's cut your term so we can pay off your house quicker. Well, let's look at it another way. Let's say we take out a rate at approximately 3%. All right. So you get to write off the taxes on that, or the interest on your taxes. I know there's the standard deduction now and some other things, but the norm throughout history is you get to write off the interest in your taxes on your taxes. Okay, so that basically makes an effective rate in let's say 2% because all the write-offs. Let's kick that out the window. And today I locked about 8 loans, and they were FHA or VA loans, at between 2.625 and 2.75 is the rate that I locked them in at. All right. So the thought process on a lot of people, and it's not a bad idea, check with your financial advisor, is if you could take the money that you would have otherwise paid toward your house and threw that into the market. Let's take away this blip, because in a 6 months or a year, we're going to look back at this and say, okay, it was a blip in the radar. I hope we do. And your average rate of return is like 6, 7, 8%. So if you can borrow money at 3 or 2.625, get a rate of return of, let's say, 7, pretty smart way to do it. So that's what some of the people are doing now because the rates are so darn low. So let me reach out. Let me tell everybody what I'm seeking to do or how I'm trying to help you guys. And tons of people are reaching out to me. And thank you so much. If you're in the middle of a mortgage right now, which probably every homeowner out there should be, please send me what's called your loan estimate if you're in the middle of a refinance right now. I don't care if you're almost ready to close. Because I had one today, they were already almost ready to close. They were getting 4.5 rate. This person was paying 1.75 points. It was like $4,000 in fees. I said, how about if I get you like 3.5 with no fees? And that's what we end up doing. So, I mean, it was a huge change of events. So they're like, well, I was almost done. You know, the appraisal was done, everything else. Like I said, okay, well, you might have to pay for another appraisal if we can't get yours transferred to us, because a lot of lenders they won't do that just because they play hardball. Okay, you spend $400 on that. You're probably going to save that within 2 months. You're going to save that on your costs, let alone, because they were charging 1.75 points, which was, I want to say it was like $3-4 grand. Or I do your loan and you pay for an extra appraisal for $400. It's still completely a no-brainer. Hate that word. So that's if you're in the process right now. If you're in the process of buying a house, exactly the same thing. As a lender, we have to issue what's called a loan estimate. And it's an estimate, but it's pretty darn close most of the time. So I ask you, send those to me. Send them to me. The best way to do it, one of two ways. The easiest way is email it to me. The estimate. There's nothing on there. It doesn't give your social security number, birth dates, anything like that. It gives me your name, your address, and then the breakdown of the numbers. To Danny, DANNY, .Frio, FRIO, at preferredrate.com. I'll give this information at the end again. Or give me a call at 844-775-LOAN. That's 844-775-5626. Okay, that's one way. If you have a mortgage and you haven't really done anything yet, please look into it. And there's no hard sell. There's nothing. Here's what I want you to send me. Send me a copy of your most recent mortgage statement. That'll give me a bunch of things. It'll give me your name, your address, and your balance, and your rate. Okay? Off of that data, I'm going to go take your address and I'm going to Google search it, and I'm going to try to find the value of your home. So I got all of that. The only thing I'm going to ask you to do in the email that you send me with the mortgage statement is give me what you think your credit score is. If you don't have a clue, I have a website that I created just for kind of some of these purposes. I didn't create it to get rich or anything. I just created it to help you guys. It's called Credit Scores, plural, creditscoresandmore.com. Go there and click step 1. It's going to take you 3 minutes to put all the data in. It's not going to ask you for your social security number. It's not going to ask for a credit card. Not going to ask you for anything of that. There's no hard hit to your credit. There's no cost, nothing. It's going to give you a credit score. Give me that credit score that you get. It's not going to be the exact score that I get when I pull your credit, but it's going to give me an idea. So what I'm going to do is I'll get back with you and say, okay, now I know the balance that you have on your mortgage. I know how much your house is worth because I Google searched your address. I know approximately what your credit score is. I can get back with you and say, here's what I can do. with all that data that I have, here's what I should be able to do for you. And that's what I'm asking people to do. And they're coming in by the 10s and 20s a day. Not getting the thousands. I hope to get to 1,000 soon. So if you would do that for me. So let's get back to this. What's causing all this havoc? Mainly the coronavirus. And I still don't know. Yes, it is playing havoc throughout the world. I don't know if it's more of a media hype. I just did my radio show Saturday on WIND radio in Chicago from 7 to 8 a.m. in the morning. And when I was on there, I was doing the report, and I think there was 3,500 deaths from the coronaviruses up to that point. And then I just did a Google search, and I don't even know why I thought of this, but how many people die of just falling down every year? 660,000 people die from falling every year. Just think of that. So I'm not downplaying the coronavirus. I don't know where it's going to take us, but it is playing havoc in the market. This week, there's really not much economic news coming out other than an inflationary watch. So this, I think it was CPI's coming out. Yeah, CPI. I'm not even going to pay attention to that because it doesn't really matter what that number comes in. I can't even imagine that we're going to have inflation with everything going on right now, especially with oil just hitting, I think, a 50-year low. And so there's really no, inflationary pressures on anything, and there's really not much economic news coming out. So I'm thinking, and here's my thought process: is we hit bottom, and we're gonna stagnate here a little bit for a while. Why I'm saying that is we were up 81 and we came all the way back down to flat. Look at the charts, and those that follow me every day, we go to this chart section. Look at this spike that we had, and this is crazy. Right here. So for those that don't, haven't watched me, here we followed this right here. This little box right here is what we followed, and you're going to see it says UMBS. So it's the mortgage-backed securities market. This is a bond that trades, that determines, dictates, creates, establishes mortgage rates. Okay? So how this works is when this number goes down, that means you're paying less for the bond or to get into this investment. If you pay less to get into it, that means you get a higher yield on your rate of return, meaning you have a higher rate, meaning there's higher mortgage rates. Okay? So the up 81 was like crazy high. So it was the increase. So the more we pay for a bond, the less the yield we get, because we're paying more for an investment, therefore creating a lower rate of return. Lower rate, lower yield, lower interest rate, lower mortgage rate. Okay? In 81, we were up 81 and we ended up the day at 5. That's a big turnaround. So here's the market. Look at this little line. That's where we opened, and that's where we closed. Look at the deviation between that. I mean, you don't see usually those deviations in weeks. We had this in a matter of an hour. And that's how dramatic this turnaround was. What it was, don't know. I don't know if people just came in and said, you know what, that's crazy low or whatever. These lines that we follow, these are called the Fibonacci levels. They create floors and ceilings. So normally you trade in a range that bounces around. These are not normal times. So I'm even going to throw these lines out the window because usually we'll hit a mark and then bounce off of it. Because you can see a lot of times there is, some, shoot, I hope I didn't mess that up. There is some rhyme or reason. Look at this. You basically have a line right here. And in the, look at this. In normal markets, you get this. Look at that. And that's a standard little trend, okay? Look at this. I mean, that's not common. So we trade this in a way. I'm trading it on your behalf. I'm going to say it's a trade because I'm watching this stuff, and I jump in and I lock in your rate, meaning if your stock advisor was watching this, they'd say buy. I'm saying lock. So that's basically what I do. And that's why I call myself a mortgage advisor. It's like your financial advisor. I don't call myself a loan officer. I'm here advising you on what you should do, what program to get into, why to get into that program, what term, what rate are we locking in, how we want monitoring the markets and everything. I don't just take your application, lock you in, and move on. This is the stuff I monitor on a daily basis, and I do it for you guys. So the video is long enough. I'll leave it at that. We have a huge run in the market. I think we've kind of bottomed out. I don't know, because we're in times we've never seen before. So again, my name is Dan Frio. I do the mortgage update every night. You can, if you're in the Chicagoland area, reach out and listen to me. I'm on Christian radio station. It's AM 1160. Hope for Your Life Radio every weekday, Monday through Friday, from 7:30 to 8 p.m. I'm on WIND Radio. It's one of the largest talk radio stations in Chicagoland area. I'm on there Saturday mornings from 7 to 8 a.m. and I usually have I'll have politicians, people running for governor, senators, congressmen, financial planners. I had a Forbes, one of the top Forbes wealth advisors on a couple weeks ago. That was a great show. There's always, it's not a mortgage show, basically. I say some economics, but I talk about, what's going on in the economy. Then I talk about, substance. I do the YouTubes every night. I have podcasts and everything. But what I'm asking you to do is, like I said before, if you're trying to get a mortgage, please reach out to me, and I'd love to help. You can reach me at Danny, DANNY, .Frio, FRIO, at preferredrate.com. Give me a call at 844-775-LOAN. That's 844-775-5626. My website's down, but it is thefrioteam.com. It's down. It's going to be up in about 2 weeks, and it's going to be awesome. You're going to be able to do so much so much on this website, along with we're going to have an app for your phone and a whole bunch of other stuff. You're going to be able to basically do the whole mortgage application online, and with my advice, we'll walk you through step by step. So hope you like the video. If you do, please give me a thumbs up. Don't forget to subscribe down below. Need your help there. And share my video if you would. I'm going to start asking that. If you would, just share it. You never know who you might know, coworkers, friends, family members, or whatever. If I can help them with a mortgage, saving $200, $300, $400 a month, they might even just thank you for it. So God bless. Thanks for tuning in. See you tomorrow, same time, same place. Bye-bye.